I still sharing it? I hope I am. Yeah, okay, welcome everybody. Appreciate you making the time. Like I said, do 15, 30 minutes so long as y'all got questions about the GammaEdge framework. Happy to go into whatever it is that you do. Any, I guess, comments on it, feedback, things. I'm starting to write out the master's portion. I'm 2 lessons deep right now. So if you have any feedback on what you'd like to see in there when I eventually get to the doctorate program, any thoughts you'd like to see there as well, happy to take that feedback so we can incorporate it. Kyle, to your question, no. So the first thing I will tell you is that I'm sorry, I don't know if you are a current member or not at GammaEdge, but Terry can attest to this, that we don't feel anything. Don't really care about feelings per se. All we care about is the data. And so, what we saw, especially today, is day over day, the structure got more bullish. Market trend model is, yesterday we saw a reversal intraday in the cumulative tick, in the white set of moving averages. We have a road track pattern higher, which we discussed in the framework. We saw a nice continuation with that today. I'll just pull it up so you guys can see it. So yesterday we got that reversal in the afternoon. We saw that carry forward into today, a very aggressive linear up day. We saw, filtered tick binds, at significant buying throughout the session. So that was constructive. Let me go to, so really quick, seeing our morning note that we wrote with Paul, really above 54.85. That's the top of transition on the full complex. You can see above those spot prices call dominated. Net GEX day over day significantly increased from 15K to 89K. That's just the net GEX here on the dashboard. So, that was a big improvement in bullish structure. And then looking at 0 DTE, that was bullish structure again, kind of above 5,500 up to 5,525, which is exactly what we saw on SPX today. So yeah, don't see anything right now that looks toppy to me. Again, we could see that breadth was improving today, so that's constructive to see as well. So that's not to say structure can change on Friday or next week, but yeah, as of right now, I'm not seeing it. I don't know if anyone else has any other thoughts on that, but yeah, the intent of this is not necessarily to, I guess, discuss the current market, but more of education, but happy to go over that if no one else has any questions. So hopefully that was helpful, Kyle. Yep, all good. Yeah, cool. So I don't know if anyone else has any questions. I assume you guys do. That's why you logged on. But yeah, fire away if you got them. Yeah, not even quite, I guess, comments. Was anything not clear as you reviewed the lessons? Just to recap, we have sentiment, which is, understanding kind of what's happening above and below spot price or calls or puts coming in and out of the complex. Because again, the way we look at the market is a sine wave. And it's driven by, to the upside, out of the money call speculation, and to the downside, out of the money put speculation. Which side is kind of having more of an influence, being more aggressive. Talk about the GEX ratio, which is kind of a way to visualize that. Just some market maker basics, understanding trend. That's all thing market trend model we just discussed. And then structure, lessons 1 and 2. Even if you take nothing else from GammaEdge, if you don't care about our levels, that's fine. But lesson 1 to 2 alone, if you're like a technical trader, could be very beneficial, because just understanding where the sentiment in the market is, are puts or calls be more aggressive, then what's the market trend model doing? Just those 2 factors alone, as long as you're trading with the trend, that's a lot better place to be than trying to fight the trend. Unless you are a counter trend trader, then obviously you're going to disagree with that statement. But in general, it is easier to trade with the trend, or understand when you have a choppy environment and when it's best not to trade. So then lesson 3, we do get into specific levels we can derive from the option structure itself, being the transition zone. and then kind of our overhead targets plus GEX, COI, and then to the downside as well. And then again, lesson 4, we kind of just bring it all together for kind of a little cohesive kind of a strategy that really complements any existing strategy. It can be overlaid. It's not like you got to abandon something to adopt what that we're teaching here. They get the framework. So we offer the entire framework right now to Gold plus web app subscribers. For everyone else, you have access to level 1. However, if you are not a Gold plus web app member, you have the opportunity, if you go to this claim your free Gold trial, just click on your current subscription, and this will upgrade you for 14 days to Gold plus web app, so you can access it. And then yeah, to access the course itself, what you can do is go to wap.com, and then up here in this upper right hand corner, there's this thing called Hub. This is your WAP hub. And then from here, see, I don't have it because I'm not technically in the GammaEdge Discord, since I like the administrator of it, but you're gonna have you see like these 3 little random things. You're just gonna click on the GammaEdge one. Then over here on the left-hand side, there's going to appear the GammaEdge framework on your left. So that is how you go about accessing that. And if you need any help with that, let me know and I can send you a screenshot or something. So yeah, working on the single stock one. Well, not single stock, but yeah, more masters is going to be all things kind of stock ETF trading per se. So the way that I envision that being laid out is, so lesson 1 is kind of all about, and we actually wrote about this on Twitter last week. We did a couple of threads on it because we had a question from someone about, how do I kind of build out a multi-day, multi-week thesis? So it's exactly what lesson 1 hits on, is kind of understanding, again, sentiment and where we are in the market. So that revolves around, again, the market trend model, where is trend and momentum, and then doing multi-time frame analysis on SPX. The reason we do SPX is because that is a good general holistic view of what the market is doing. Very deep, very liquid option market. It's where a lot of speculation takes place. So we can kind of use that as a general barometer per se of kind of what the market's thinking. So again, there we'll look at the full complex. We'll look at 0DT, then we'll look at, different time slices, a week out, a month out, just kind of understanding if there's confluence in the transition zones. Are all the time frames generally more bullish? Are they more bearish? Meaning, okay, are we seeing the full complex is call dominated, but then, kind of 0DT to 1 week, we're starting to see more puts come into play. So maybe that's kind of an early caution sign, or vice versa. Everything looks kind of put dominated, but we're starting to see calls trickle into the near term. That's just kind of those turning points. Then lesson 2 is in, okay, we have our bias established. Now let's go find some favorable candidates based off our bias. So if you're long, we have specific stocks or scanners we've developed that isolate those stocks that are call dominated above and below spot price. And again, from the bachelor section, we know call dominated above and below spot price is generally a bullish condition. We also have scans that kind of scan for stocks that are going from P-trans plus GEX. And again, we know from the bachelor section, when we get that move through P-trans, we kind of expect that acceleration higher because the call side of the equation really takes hold of price. It starts to exert a force. We start to see that push higher. So we have scans that isolate those stocks as well. And to the downside, we have put dominated scans and everything like that. So once you have your sentiment, once you have your kind of universe of stocks you're interested in, then you can start analyzing those stocks. And I mean, that's very similar to what we've already talked about, just the framework you do there. That being, again, looking for good risk to reward, things of that nature, using the levels if you want to, using your own technical analysis if you want to, because we found bullish stocks. So however you want to get in and out of those, up to you. And then, yeah, there's some other things I can't remember right now, but it'll be like 6 or 7 lessons. Yeah, I mean, Yoka, it's really trader dependent how you want to specifically express that trade. Um, so yeah, I don't have a great answer for you. Like me personally, one thing that I sometimes do is yeah, you get that move above P-trans and look for some kind of retest. If it just keeps, you know, cruising right through P-trans, you don't get an opportunity to enter it, then so be it. If you just take the breakout straight through P-trans and play it, then that's perfectly fine too. It's kind of up to you. Or if you look for a move higher, then I'll pull back to VWAP and then go higher from there. I mean, there's a million different ways to enter a trade, right? So those are just a couple ways that I like to approach it. Certainly wait for a candle close above. Nothing wrong with that either.
And I prefer a retest and go. I mean, not every time, but I would prefer it to go above, retest, and then take off, and that gives me confidence to get in that trade
Oh yeah,
above that level.
100%. Yeah, I agree with that. 100%. Yeah, yeah. I like to look for confluence of the opening print on the day, VWAP, and a key level like P-trans or something like that. So if you kind of get a retest like VWAP and opening print, like that's golden opportunity in my opinion. That's just the way that I like to do things though. So it's not for everybody, but y'all are a quiet bunch. BA, Harold, y'all got any questions?
I don't have any questions. I'm new. I'm just here to learn. Let's check it
Yeah,
out.
awesome. Have you checked out the GammaEdge framework yet?
You mean the lessons?
Yeah, exactly.
Yes, I've started on, I think I've got lessons 1 and 2. But I need to sit down and just get that finished up, and it
Yeah,
seemed
all
very
good.
interesting.
Yeah, lessons 1 and 2, is it at least like clear or clicking it all, or can you at least like see like, oh, that kind of makes sense. Maybe that's useful, or maybe it's like I still don't understand anything, which is completely fine too.
Well, I mean, I'm new to this.
Yeah,
I
totally.
don't know much about options and gamma levels and all this stuff, but it's just going to take me to a little time, and I'll probably have to go back through it again,
Yeah.
and and I'll just do whatever it takes.
Yeah, 100%. Yeah, one thing I was gonna say though, like lesson 1 and 2, yeah, something that I'm trying to like break like a limiting belief, so to say, or whatever, is yeah, like you made the point about like options and gamma levels and stuff like that, right? And the intent of lesson 1 and 2 is like you don't need to know any of that. You don't need to know about a gamma level. You don't need to know about options. You don't need to know about anything. Although the intent of 1 and 2 is more like just sentiment related and kind of market environment related, meaning is it kind of generally more of a constructive bullish environment or bearish environment? What is the market trend telling us? What is kind of the complex of above and below spot price in terms of call and put speculators telling us? Keep in mind, I didn't say anything about any kind of gamma delta level, didn't talk about charm or Vanna, anything like that. It's just kind of using kind of just more or less like, hate to say, like first principles, just like the very basic things that you need just to kind of get market awareness. And then from there, then we can get a lot more technical, right? To the extent you want to go down that rabbit hole of applying different levels to the trading and whatnot.
Sounds good.
Yep. Yeah. And if you got any questions, feel free to reach out. I'll try and have another one of these Q&As. I don't know, later this month. I'm kind of in the mode of writing the next module right now, so a lot of people are asking for it. But or if you're in the Discord, obviously you can ask a question anytime and we'll answer it. So yeah, scan for you is so we have this called scanner right here, and then what you can do is like come down here and type like call dom del. This is the scan that gives us all call dominated stocks above and below spot price. Give it a minute to run. Do something else. Yeah, so here this brings up, these are all stocks So our database is basically any tradable stock in the option market. Keep in mind, not all stocks that have option market are like good to use our tools on. We want like a liquid options market. So as an example, Apple could trade, 5 million open interest, while CrowdStrike, while it's popular, could have like 100,000 open interest. So that's not really, our tools aren't really as useful for that stock as an Apple per se. Now keep in mind, I still like to also trade those stocks because, if it's moving to the upside, I want to partake in that. And maybe I may use like the CrowdStrike option visualization just to kind of understand, okay, is there like a general consensus overhead where they're targeting? So that's kind of the way that I'd use that. But yeah, we have all these stocks, and then what I did down here is I did I ran the same scan, but I did true. And what that true does is it limits the universe of the scan to what's called the GammaEdge liquidity list. And the GammaEdge liquidity list are those stocks we've identified. It's like 50, 100 stocks, maybe 30 to 100. Terry may know better than me, but it's those main stocks that have the most kind of open interest, that are the most, the market is continuously interested in those stocks. So that's why you're going to see just mostly large cap names that show up there. And then what you can do is like, so like it comes with you can download a Excel spreadsheet to the extent you like that. And what you can do is you can quickly, so what you're going to have here is you're going to have, P-trans spot price plus GEX. And then because call Domdale is a bullish scan, that's why we have these bullish levels here. Then we have, percent to positive trans, percent to plus GEX. So you can kind of understand kind of what the risk to reward is there. Just a quick way to do that. So yeah, hopefully that's helpful. It'd be great if you could add weeklies to get the more liquid names. I don't follow that comment. If you want to elaborate, go for it. I mean, we're just using all of the expirations available in a name. So we're analyzing all the expirations offered. Yeah, that's right, Kyle. So I ran one scan called Omdel, which is the entire universe of stocks. So that's why there's, like 100 names there. But then I ran the exact same scan. I just did this true, which just limits the size to those most liquid names. So it's not like it's a different scan. We've just identified, okay, these are the biggest names with the most liquid and liquid deep option markets where options kind of have the most impact. So now we're going to specifically look at those as well. So we're not changing anything per se. We're just kind of narrowing. We're going from a massive universe to a more curated universe per se. No, Yoko, we do not have futures options data. We have a lot of futures traders in the room. What we do is we look at, if you're trading ES as an example, we just look at the SPX chart. And we, people have, indicators on TradingView that do the fair market adjustment for them per se, but no, we use SPY, SPX, and that's good enough for us. And so, yeah, Kyle, just to clarify, like, yeah, like all your single stock names have your monthly expirations. They also have weekly expirations as well. We're incorporating all of that into our analysis. And then SPX is the one that has, your daily expirations. Yeah, we have a scan called, so it's N called Omdel. And what this does is this looks at, so like this is all stocks that are newly call dominated. I think it's from yesterday to today, or it could be, I can get more clarification and come back for you. But yes, these are your newly added names to the call Del list. I don't know if it's, so yes, today, yeah, certainly today. I don't know the last hour. I don't think it's that frequent. But yeah, these are certainly these are your fresh names that became call dominated today.
Actually, if you're trading a weekly or a zero DTE in options, and you're looking in the web app, you know that updates every 15 minutes. And if it's moved enough to change the state that it's in, call or put dominated, it'll show immediately.
Yep. Yep.
So I'd like to give a pitch for, you guys should be on the Taylor's morning and GE's email that's gets sent out. So, you know, a lot of this is, there are scans, but there's it starts with looking at what the structure is and then building from there. And then the bachelor course in the framework does a great job in terms of reinforcing that information educationally, like, you know, just repetition. And you say something, the student looks at it, has questions, comes back, and it's daily repetition of what the service is looking for, and actually how to use it, and structural view of the options market. So you can run different scans which are available, but the pre-market is really where, hey, what's the structure actually looks like for the day, and you're set up for the day and how it's going to be affected structurally, and the changes of, you know, where spot price moves versus the open interest and things like that.
Yeah, totally, Tom. So one thing, yeah, so Tom hit on it, but yeah, we have like a morning newsletter as well. So like, if you're not a member of GammaEdge, but you still just want to see what we're about, all good, no worries. Like, you can subscribe to our newsletter. It's free. I mean, we put a lot of content in here. So, you know, just talk about zero DTE. We just have a little bit of excerpts like from our commentary in the Discord. Obviously, we don't give it all away to you, but you know, just a little bit, kind of education points, maybe some you may find useful. We provide some dashboards. We go over the full complex, same thing, just kind of limited commentary. Look at the market trend model, these market structure heat maps. So that, I mean, there's more detail in these, and that I'm not necessarily going to go over today. I'll incorporate them in the GammaEdge lab, but it's kind of outside the bounds of the bachelor's framework. And then really this is more just sentiment stuff, just kind of understanding what the general sentiment in the market is. Then the scan results, I include, you know, the call Domdale, put Domdale scan outputs a day. And, you know, saying, you know, we have over 17 scans that you can run, and then just the dashboards for a specific slice of all the Mag 7 stocks. And then, you know, if we put out threads or stuff, I'll link to those as well. So if you're interested in signing up for that, let me know. I can drop the link in the chat if you want that.
Hey, Taylor,
Yes, sir.
Kyle asked about BAC. So, you know, I'm not sure. We might just go take a look at it in the web app.
Yeah, for sure. You can do that real quick. So like BAC is breaking out. Well, let's have a gander at that. BAC. So much crap here.
And then maybe just show the dashboard as the structure. There you go.
Yeah, I was getting to that. So yeah, I like to start it with the charts. Yeah, I mean, certainly it's breaking out there, right? So here we'll start with the full complex. Looking at the full complex, above the spot price is bullish. That's constructive. One other thing I like to do So this is how you run a command in our Discord, like the GR. You guys know what the framework, that's the that's the GEX ratio. But even better, we can go to this market structure heat map real quick. Let me pull it. Here it is. So here, BA is at the very bottom. We can see down here. Let me turn on annotate. Okay, cool, you guys. So this row right here, this first row, this is the delta state. So green means call dominated above the spot price. Yellow means mixed state. So I think that's like put dominated above, call dominated below. Red is put dominated above and below. So it's starting to be more constructive to the upside, meaning call domination starting to come into play. Our GEX ratio, 2.47, that was as of yesterday's close. And we can see that is actually kind of quite high. Delta balance is 1. So yeah, calls are dominating on the complex. Let's turn this annotation off. All right, I have no idea how to clear this screen. It's kind of annoying. So yeah, we can see, yeah, a lot of calls are poured in the complex there. That's good to see. Then we'll go to this. Yeah, so again, this is the full complex. Everything's turned on. The one thing for me to know right now is we can see our key levels. That's plus GEX and COI are both at 40. Ideally, we see these above spot price, which you can see right now, like call open interest of 225K. That's easily the biggest out of anything in the complex. So really, we want to see these call speculators commit capital higher, or I guess we should say recommit that capital higher. So, if we see this plus GEG shift to 45, that'd be a very good sign to see. Because the risk right now is, these guys, 40 again is the most convex strike. So, a significant amount of those gains that they kind of realize that out of the money to in the money risk, they've captured that. So the risk here is, that they monetize their position, but just have to wait and see. But yeah, as you pointed out, we have broken out to fresh highs. Zooming into the 1 month complex. Yeah, looking at the 1 month again, the biggest position here is at 40. We did see plus GEX move higher to 41, which is where we're at, and really gamma profile kind of drops off after 42. So we'll just want to continue to monitor this, see how it builds up. Like if I don't have a position in this name, I'm not necessarily getting into the name here because again, the GEX ratio is about the highest it's been. So kind of everyone's on one side of the boat. We're not seeing any meaningful speculation like build out significantly above spot price into this coming monthly expiration. Looking at, yeah, so like even the August expiration, not seeing a lot. Looking at the September expiration, I'm just doing these because these are the most liquid monthly expirations, and this 9/20 is the quarterly expiration as well. So yeah, agree with you that it's breaking out to all-time highs, but me personally, I'm not necessarily like taking the name here. Maybe if we get, a retest of 40, maybe you got something there, but that's just how I'm looking at it. Yeah, and you got earnings coming up too. You talk about the difference meaning between the green net delta and the red net GEX below price. Well, yeah, that just has to do with gamma. So you can see the reason we have green delta is because, well, yeah, we can think through that, Kyle, about why we have green delta. The reason we have green delta is because below spot price, we know that there is only 2 possibilities for an option. It is either an in the money call or it is an out of the money put. There can be no other state of that option, right? And so when we go we'll look at 38 as an example. There are 48,000 puts, there are 25,000 calls, right? And so you may be thinking, oh, net delta should be negative. No, but it's not, because these calls are in the money. So their delta is somewhere between 0.5 and 1, as opposed to these put options are out of the money. So their delta is somewhere between negative 0.5 and 0. So this delta on the calls is there. You can see it's significantly greater than the whatever you call it, the call delta is significantly greater than the put delta. But the gamma, the gamma is negative because there's simply more puts than calls in the chain. I think gamma is roughly the same between calls and puts. So that's the reason that you do see this. Does that make sense? You can say no if it doesn't. I can re-explain it. I don't mind. Oh, there it is. They're all dropping in school. Does the interpretation of the two? No, it does not. I mean, it's always going to be red below, because generally below spot price, you're always going to have more puts than calls. So this is always going to be red GEX. But yes, what's more important, I don't necessarily care about the difference. I care more about the delta. Like, do we start seeing red numbers show up in the delta, which means that in the money, out of money puts are starting to become more prevalent than in the money calls? That would make a difference to me. But this red versus green doesn't really make a difference to me, because this is generally always going to be red below, and net GEX is generally always going to be green above. But like, just as an example, like this 42.50 strike, you'll see there's a lot more calls than puts. So you're probably thinking like, okay, well, why is the net GEX red? And that's because if you drill in, because we have every expiration, right? But if you drill in, you're probably going to find that those puts are a lot more closer in expiration than the calls would happen to be my guess. And we know that gamma is highest at expiration at the money and at the money. So that is potentially a reason for that. So yeah, again, something we hit on, but the reason that we like the GEX ratio as opposed to the put call ratio is the put call ratio does not take into account time. So you could put on 100 billion call contracts for 5 years out, and you're going to see the GEX rate, the put call ratio go to infinity. However, if you look at the GEX ratio, it's not going to have that big of an impact because those are 5 years out. So those are not really having like an impact on speculation today, if that makes sense. W Ray, I'm not sure if that's how you, Ray maybe, saw you join. We're about to wrap up, but we've just been going through the framework and whatnot. So if you got any quick questions, happy to answer them. If not, we can wrap it up. Yep. All right. Well, thank you, everyone. We can call it a session from there, and you can be on the lookout for, another one, I guess, in the coming weeks or whatnot. But yeah, if any questions, you can always email us, contact us at GammaEdge.com. US, or, you know, in the Discord, we're always on there answering questions as well. So with that, y'all have a great 4th of July. We'll see you later. Bye.